Well, hello, Miss Shakira.
Hi, how are you doing today?
We are doing great.
Good, good. Well, I'm super excited for tonight. We got some awesome information to share with the people out there for this first time homebuyer workshop, and I'm ready to get going.
All right.
All
Well,
right.
welcome everybody. My name is John Howard. I'm really excited to work here with Shakira. Shakira is one of my favorite agents to work with. We've done a lot of transactions together with first-time home buyers, and not every realtor can work with first-time home buyers. It takes a lot of education, knowing the market, understanding a lot of emotions when it comes to home buying, and thinking about long-term plans and a lot of patience with first-time home buyers. But you love working with first-time home buyers, right?
I sure do. The experience is lovely. To be honest with you, the first person I ever worked with was my mom.
Ooh,
And
that's a tough client.
yeah, she's very tough. And we had a little tech savvy. She's not the best, but hey, we made it there. And the biggest thing that's kind of what got me into real estate because at the time I was not, an agent. I was just kind of, helping her out and, making sure we got everything together. And it was a little stressful for the both of us. But when we got to the closing table and I saw how happy she was, I was like, wait a minute. I want
Yes.
to share this experience with other people. So I was like, you know what? I'm thinking about getting my real estate license. And here I am today.
Well, I'm glad that the world works in mysterious ways. I'm glad it worked out that way. And like you said, like there is no better feeling than getting a first-time home buyer the keys to their first home, where they
Yes.
fire that landlord and build wealth on here. So it looks like we got a number of attendees here, which is very exciting. The chat is enabled. If you have any questions whatsoever, please either you can raise your hand, I can give you permission to talk, or you can write in your questions into the chat. And we have a couple members of my team here that can help answer questions. So the whole purpose of this presentation, and it's a workshop. So in workshops, there's got to be a little interaction back and forth here. We want you to feel prepared, excited, motivated, and clear, actionable steps to fire that landlord and to build your own equity. All right. So, what can you expect from this presentation? We want to talk about why. Why does anyone want to buy nowadays? Why don't anyone rent forever? What does it take to become a home buyer? What kind of assistance is available for down payments? Is it better to rent and buy? Because there's a couple times, Shakira, that I know that when we have someone that's been referred to us, hey, you know what? Maybe now is not the right time to buy, and that's okay. Renting can be a successful strategy with the proper plan in place to buy moving forward on that.
That is true.
Yeah. So don't feel like that's something that both Shakira and myself, we're going to be in this business for a long, long time. And so right now is not the time. That is a-okay because we're going to put that plan in place. And whether it's 6 months, 12 months, 24 months, 1 month, 1 year, 1 decade, when it comes time to buying, you got yourself a good team here with the Howard team and Shakira's team on here. And then we'll have actionable steps on how to get started while also overcoming some myths. So, why does buying beat renting? So there's I call it like the three main reasons: stability, the investment, and the control. And we're going to dive deep into this throughout the process. But the stability is I know when I was renting, all of a sudden you get when your lease becomes new, like you know what, I'm going to renew my lease for now 12 months. You expect it to happen, and sometimes that rug can get pulled from underneath you. Or maybe they decide to jack up rent to quote unquote market. It's been under market for so long I need to get a new renter in. And so, unfortunately, what the good thing about buying is that your principal and interest part of the payment of your mortgage, that's locked in for the 15, 20, 30-year term mortgage that you choose. And so that gives you that stability. The only time your monthly payment can ever change is if your insurance or your tax bill changes. And that's something that we can dive in deep. Um, Investment. Um, uh, when you rent, all that rent money, 10 years. I have one of my best friends. He had the best paying job out of all of us in college. And then 8 years later after college, he's still renting. We added up that rent and it was close to that six-figure mark. And he had nothing to show for. Conversely, I bought at that same time after 1 year renting together. So I had 7 years of home ownership. When I sold that townhouse, I was able to recoup every dollar of my principal, interest, taxes, insurance, HOA on that. And so when I sold that home, I had that big chunk of change, 7 years of saving of equity to put down onto my forever home, which is something
Mm.
that's nice. And my friend that was renting, well, he had some good memories hopping from different complexes to complexes. And but looking back on it, when it comes to building that wealth, my kids are learning their ABCs, and I like to say, hey, A is for Apple. No, A is for amortization. There.
And
Uh,
appreciation.
Oh, and appreciation. That's right. That's coming from the realtor. That's a good A. So amortization and appreciation equals wealth because amortizing it means paying down your loan. So what you owe on that home goes down. And appreciation, what you pay for that home over a year on average appreciates about 4% a year. Add that up over 7 years, compound it, and that's a lot of wealth being built to have that chunk of change for that equity. And then control right now, like I told you, rent sometimes makes sense. My home got flooded during Hurricane Helene. I am forced to tear it down and rebuild it. So right now, I am renting while I'm going through that building process because that was the best thing for me and my family. So renting makes a lot of sense for the right person. But right now, I can't paint the walls. I don't want to put too much holes in my walls to fix it, knowing that I'm going to be leaving here in 12 months. And there. So I want to make sure from a technology standpoint, Ingrid, if you're listening, when you are do you see the screen of both me and Shakira or only the person that's talking on that? Only the person talking. But it's okay. If I'm talking, if when Shakira's talking, you might catch me picking my nose, but we'll find out. So the biggest thing, 40 times the wealth. When you look up the wealth of renters compared to the wealth of buyers, this was a study, Wealth Magazine, I believe it was, 40 times the wealth advantage on that. So the person's net worth is 40 times more from the average homeowner compared to the average renter. And then 4 to 5 years to break even. What does that mean? So when you factor in the down payment and the closing cost, that money that's separating from your bank account, even though it might be an investment, well, guess what? That money still left my bank account. And I feel that. That's money I could have spent on groceries, vacations, whatever it may be, but it became a down payment and closing costs. Well, when you add up that rent of what I would be paying, it takes about 4 or 5 years to recoup what you would that down payment and closing costs. But in this market, lately we've had a lot of sellers that are offering to pay for all the closing costs. And then if you couple that with the right down payment assistance program, you can potentially get into a home with little to nothing out of pocket from that separates from your bank account. And then so then that break even becomes in way less than a year when it comes time to recoup that expense or that investment, I should say. So if anyone's ever sat down with a financial advisor, you probably heard it's not about timing the market, it's about time in the market. And that's because if you take any 10-year period, 1931 to 1941, 1932 to 42, 1976 to 86, all the way, all these different 10-year periods, the home on average, the home has appreciated 4% a year. And so what we just showed here in this one scenario, and some numbers say 4.7, and some say in between 3 to 5. If all those fact checkers out there want to Google and say average appreciation of a home, they'll probably say about 4.2%. Here, I wanted to show a $350,000 house. We're going to put 10% of a down payment. I'm going to get a loan for 6.5% fixed for 30 years. And I'm just going to assume that my home is going to appreciate 4% annually. I mean, I wish investing could be a nice straight line like this, but there's going to be some ups and downs, some peaks and some valleys, but over time, it's going to probably average about 4%. And in 10 years on this scenario, you're building about $250,000 of equity in your home. And that is something that is beautiful and exciting because I don't know about you, but I came from very lower middle income America, and seeing a chunk of money is very rare in that demographic. And so it's either you win the lottery, you start a small business and sell it, um, you get an inheritance from a grandparent or a relative. There's very few times in your life where you get with a lump sum. The most common, a successful real estate transaction. And that's what happened in my life that transformed and changed my life. It took me from lower middle income to the upper middle income. One day it's going to be there. I'm going to get high net worth, darn it. This is going to take a few more successful real estate transactions. So, what does it take to become a homeowner? So, there's three big ones. You have your credit. What is your track record of paying people back? When a bank wants to lend you money, they want to make sure that you're credit worthy and you will do what you said. That's what your credit score is. And TransUnion, Equifax, and Experian, they're the big conglomerates because they track your business to know if you have any 30-day lates, any 60-day lates, any big credit events like foreclosures or repossessions. Your credit score, you want to make sure that it's taken care of. Your income, banks want to know that you have the ability to repay. Back in 2008, your dog could get a loan. Max could get on a loan application to buy a home because you just said, hey, on your loan app, I make $1 million a year. Oh, that's great. I believe you. Now, because of 2008 and a lot of risky loans, I like to joke and say that you're guilty until proven innocent. We have to prove that, hey, my income is stable. Usually it means I'm getting ahead of myself. Usually it's 2 years in the same industry. There's exceptions to that. That's something we're going to dive into it. But we want to know what your stability of income is. And then the down payment. A lot of times it takes money to put down on a home to buy, but you don't need 20%. And that's another myth that we're going to bust here later. But those are the three biggest things: your credit, your income, and your down payment and closing costs. But the good news is that number four right there, there's a lot of programs and assistance because the number one reason why renters don't become owners is because it's cost prohibitive for that down payment. Life is so expensive. It is hard to make ends meet, much less save to put it down for a down payment. There's a lot of organizations and that understand that plight, and so there are some really great down payment assistance that will help bridge that gap if you have the credit and the income. I feel like I've been doing all the talking. So let's get the smarter, more attractive person talking because I'm tired of hearing my own voice. So Shakeira, help me understand. So if I am a first-time home buyer, I go on and I search the web and I come across your page and I'm like, yes, Shakeira is the person for me. Or you've been referred to from your past clients. What can I expect to understand? What is like my first-time home buyer guide?
So, thank you, John. So, if you stumbled upon me online or through a referral, or maybe we're high school, classmates, or from a cousin, you never know, family. First things that I will get you, we'll set up a time to sit down and have a conversation, and we'll go through things that I like to call a home buyer's guide. And basically, we'll go over the steps. And step one is always determining your budget. So what we would like for you to do is we want you to check your savings for down payments and costs. Of course, you're gonna get with John. We're gonna talk to him about getting pre-approved because what we don't want to do is we don't want to go out there, find our dream home without taking this financial step first. Because now we want to know what we can afford, our budget, we want to try to stay on track with that. The second thing is after we get our pre-approval, we're going to have another sit down. And we're going to talk about your needs and your wants. We're going to think about schools. How long you're going to be inside of this home? How are you going to use this space? Is this going to be eventually an investment property for you? Are you going to grow into this home with a new family? Overall, just how will you overall use this space? Then after that, of course, the home search begins. We'll go to open houses on the weekends. We'll go to different private showings, anything that you can think of. Sometimes we start a home search online. Of course, you'll go to Zillow and Realtor.com. You'll see what you like. You'll shoot me those text messages like, hey, I think I want to see this property, or hey, I think I want to check this neighborhood out. You'll also do a little bit of things on your own too. You'll drive through those neighborhoods to see if you like the community, if you like the amenities that they do provide as well. After we do find that dream home for you, then that's where I go to work. I start negotiating. We make competitive offers. I look into the market, see what the recent sales have been, see what the competition are, see exactly what's been going on in the market so we can make sure that we have a really strong offer. And then once we do have that offer and the offer is accepted,
The offer accepting, that is the most exciting slash terrifying, oh my God, this is really happening moment on that. And that's when you really shine and become the quarterback of the deal, right? That's because you're going in there and you're going to say, hey, we better get these home inspections, make sure this is not a lemon. We don't want money pits and expensive repairs.
correct. So, we get those specialized people who specialize in roofs and different things. We get those 4-point inspections done, the wind mitigations done to make sure that this home is structurally ready for us to move in. Um, and so that's one of the things that we'll do. And then after that, then, we'll make sure we get you back over to John. And then, we'll be finalizing everything as far as your loan and everything goes.
Yes, and that's when the secret to my success is I hired people smarter than me. That when the loan goes into, like, that's when we finalize the loan. And I'm looking over the terms, I'm negotiating with the banks, finding the best program and rate for our buyers. And then we make sure, because like you said, in your step one, that solid pre-approval, we get all that documentation up front first so that when you do go under contract, we're not chasing our tail and like, oh my God, am I going to qualify? We know with certainty you're going to qualify for this loan. And maybe we're just updating some pay stubs and some bank accounts. We submit that loan to underwriting, and we want to make sure that we're going to then order the appraisal, make sure the home is worth what it is. Underwriter says this is the most beautiful submission I've ever seen, Howard team. I'm like, I get that a lot because my team is excellent. And we go, hey, Shakeira, as client, you are approved, but explain this deposit and get me a clear update of your pay stub because the one you submitted is a little blurry. Boom, we're clear to close. Um, and you get the final numbers on what you're going to wire to the title company. And then the most exciting moment happens, right, Shakeira?
Yes. So once all the funds and everything are wired, and then we prepare for closing day. So normally we get the clear close and everything. And then the next step is the most exciting, but can also be tiring, is your move-in day.
Ah, I'd say that's the worst part of buying a house is moving, packing, unpacking, realize how did I accumulate all this stuff in my lifetime? Do I really need this? I'm gonna have to Marie Kondo this, like, thank you for the journey. See you later, not taking you to my next house on that. But it is it's also really exciting because moving day is a lot more exciting when it becomes your home. I can do whatever I want. This is my house. I'm gonna make it my own. So and that's, I mean, that's a very, I
It's
would
very
say oversimplified, but it's really not. I mean, that's kind of like what our transactions are like together. It is such a smooth, easy process when working with the professionals. But now, what do I, when do I have to pay certain things? Like when is money separating from my account? And there should not be any money separating your account until you're finally under contract. And that's what we have, what's called the earnest money deposit. And part of the offer that Shakeira helps craft with you is, hey, seller, we're really serious about buying your house. On this $300,000, we're going to put between 1 and 3%. So 3,000 or $9,000 in escrow. And if I back out for any reason, that unless those contingencies that you skillfully negotiated to protect my money, the seller can keep that earnest money deposit if you just change your mind. I don't want, I got cold feet, I'm done. But the one that I'm really proud of over 1,000 transactions, knock on some wood here, we have never lost the client's earnest money deposit. And that's because we take a look at those loan contingencies. Hey, I have an inspection contingency. And that is your first. So after your first check you write to the title company, let's just call it $3,000. The good thing is that $3,000 come closing day gets included in your down payment and closing costs. So that earnest money deposit is not something the seller gets to keep. once you close on the home, that goes towards your final cash to close. And then, but the first sunk cost of like, hey, I'm going to write a check and I might, if I don't buy it, I'm out this money, is that home inspection. But would you agree that that could be the best $300 to $500 you've ever spent?
I would say yes, John. And the reason why is because everything can look pretty. You can have beautiful paint, you can have everything so shiny, but then when an inspector goes through and look at the pipes and then find out the pipes are from 1953, made out of copper and they're barely working, then we
Yeah.
may have a bigger issue than we thought we had.
And that's an expensive repair. I had a friend that had to just tear up brand new flooring, drive through the foundation to repair the cast iron plumbing on that. And that's $20,000 to $30,000 in repairs plus the new flooring. But especially now too in Tampa, there's homes that took in water during these hurricanes. And you have a lot of home flippers, and there's a lot of really great home flippers that properly remediate and rehab ones. And there's some that just put some lipstick on a pig. And that's why having a good home inspector to find out to say, hey, we're checking for moisture. We're checking to see what the plumbing, the 4 points, the roof, the AC, the plumbing, the electrical. Those are your four most expensive repairs. We want to make sure that those four things are going to be okay. And that's especially as a first-time home buyer, those are the four things that you want to make sure have a lot of life left on it. Because if you in the first year, second year, get hit with a big repair, home ownership is suddenly not as exciting as you thought it was.
Mm-mm.
But that's why I've been so I've had clients that unfortunately go under contract 2 or 3 times. They get a nasty inspection and they just don't move forward with the property. But what's nice is with that inspection contingency that Shakeira masterfully negotiated into the contract during that 10-day inspection period, sometimes it's 14, sometimes it's 7. That goes part of making the offer because the shorter the offer, the more competitive the seller likes it. The longer, the more protective is for um, the buyer. Oh, look, we got our first question. Sorry, Shakeira. It's like a squirrel just came in. Um, can the seller pay for my inspections? They can, absolutely. Actually, when I bought my house, a previous buyer bought and backed out because the inspection was nasty, and the seller shared that inspection with me. So I used that inspection. Um, but most of the time, you're paying for your own inspection on that. But it is possible that they could. And then when you take that 4 point, that wind mitigation, that's when you give it to your insurance agent, and then your insurance agent will bind a homeowner's insurance policy. And the down payment and the closing costs, that's something that we're about ready to dive into. That will vary. And you do not wire that money until like the day before closing. Once you're clear to close, the title work is done, the appraisal has come in. The appraisal fees usually about $450 to $600 for the appraisal. We don't order or have you pay for that appraisal until you're through the inspection because we don't want you to pay for an appraisal, then get the inspection back and realize, ooh, I'm not buying this house. This is too much work. And now you're out the appraisal money. So we said at our team, I like to think that we are a steward of your money, and we don't want you spending money unless you know you're absolutely moving forward. So that we usually order the appraisal after you're through the inspections. And then your closing costs and down payment goes through. Oh, we got another question here. I love it. Does the guidelines apply for the VA loan as well? Well, I love that question. Some might say the VA expert on
Yes,
that.
he is.
Yeah. So yes, so the VA, well, at the Howard team, we pay for the VA appraisal. So we actually order the appraisal in earlier on that. It's something that we try to separate ourselves for it. But yeah, those inspections, those homeowners inspections, that's the one cost that you're going to have outside of closing that will go towards like the home inspection and for insurance purposes and to see if you want to buy that home. And it also has um, a termite inspection. So the VA is the only loan program that requires a termite inspection. It's called a WDO, a wood destroying organism one. But I always encourage first time home buyers to get a termite inspection anyways. It's about $100 because I like to joke and say there's only two homes in America, in Florida, is a home with termites and one that's going to get them eventually. And so having that termite inspection sometimes is the best $100 extra, but the VA does require that, and the seller is allowed to pay for the termite and the homeowner's inspection, but it's not required by the seller to do so. Um, Post closing costs. Tell me about those, Shakeira.
Okay, so basically you have some moving expenses, and that just comes with, I know we may have a big family, we may have some movers, but in reality, most of the time, movers is going to be the fastest and most efficient way to move it sometimes. Um, it also you'll just come with app like post closing things like when you want to get your lawn care and different things started. You may be, I know here in Florida a lot of people don't like to really be outside and cutting the grass, but Georgia's kind of a little different. It's kind of more like a, leisure and fun thing to do. So basically just, the moving expenses is one of the things that you really have post closing.
All right. And then the recurring costs after mortgage. So like let's say today, October 22nd, you just closed on your home. You got those keys to your first house. Your first payment is not until December 1st. And then after that, that payment will be auto deducted from your checking account for the next 360 payments. And that will usually include your principal and interest, your taxes, your insurance, your flood insurance. The one thing it does not include is your HOA. Your HOA, if you so choose to live in a community where you have a bunch of Karens telling you how to live, just joking. I actually love HOAs because HOAs help maintain property values. Um, that is the one cost that you'll have separately with your HOA, and that's going to be dependent monthly, semi-annual, annual. Every HOA is different. Your mortgage company will never pay for your homeowners association, but if they will always pay for your insurance for flood and homeowners and your property taxes for you every November. They pay it annually to get the best discounts, and they pay your taxes early to get the biggest discount on property taxes as well. So that's something that helps you give a peace of mind. And 99% of my first-time home buyers, when they said, "Hey, what is a payment I'm comfortable with?" I would like to be at 2,200, no more than 3,000 a month. But that 3,000 includes everything usually: principal, interest, taxes, insurance, HOA. So that's what we got to reverse engineer to figure out that comfort level for that purchase price. But that's the things after closing that you're going to have every year. Now let's talk about credit. Technically, you can go down as low as 500. I've heard of people buying a home in the 400s. I never have done that. My lowest is 500. Um, but it gets a lot more costly. Where I tell people that usually, especially first time home buyers, you want to have at least a 580 score to get an FHA or a VA. But it is possible to do so before. At a 580, you can put down as little as 3.5% of the purchase price for a down payment on FHA. If you have below a 580 credit score, you're forced to put down 10% for FHA. VA is still 0% down. They technically do not have a minimum credit score. The VA does not care what your credit score is, but lenders will put on what are called overlays or additional restrictions. And so all the VA is doing is insuring the loan. The lender is the one that provides the money. And the old adage of he who provides the gold makes the rules. And that is what happens a lot with these credit scores on that. At 600 is the magic number for a lot of down payment assistance programs. They usually require at least a 600 credit score. I have not heard of one that will go below 600, but allegedly there is one out there. But I have not found that magic bullet yet. But then 620, the world really opens up, and you can get USDA loans, which means you want to live out in the country, where the USDA incentivizes you to move out there. And it's a 0% down loan, so you're not required to put down a down payment just like a VA loan. But there are past credit events. One thing to think about is if you have a bankruptcy, does not automatically disqualify you. Usually there's a waiting period. VA is 2 years, FHA is 3 years. Um, if it's a chapter 13, a lot of times it's just 1 year. If you've been foreclosed on, A lot of times it's 7 years, but there's some things you can get down as low as 3 years from the time that the deed finally changes hands. Um, income, income and employment. So typically, you need to have at least 2 years of income. But a lot of times, especially with my veterans active duties, when they usually either right out of ROTC in college or they enlist it in high school, sometimes you can use the high school and the college or trade schools at the educations as part of that 2 year requirement. But typically, you need to have at least 2 years of a job history. A lot of times in the same line of work, but a lot of times that's what separates loan officers from each other, where you can kind of tie in skills from two previous lines of work to show that your income is stable. If you move from W-2 to 1099, typically you got to at least wait another year to see how you write off on your taxes, because the best thing about being a business owner is that you can write off things that have everyday expenses that not have to pay Uncle Sam. But Uncle Sam has his checks and balances and says, hey, if you want this government insured loan, you better pay your taxes, because that's the income that we can use to help you qualify for that loan. But then we also have a lot of self-employed loans where business owners show $0 on their tax returns, but then we just show their bank statements that there's actually money coming in, and we can get a loan for for business owners that way. But W-2, if you're commission only, a lot of times you need a 2 year average. If you're bonus heavy, a lot of times a 2 year average. And you don't necessarily have to have 40 hours. Like if you're a nurse and it's typical for 32 or 36 hours, as long as you're considered full time, we can use that income. If you're someone that hustles and has like three different job income sources, a lot of times we need to have at least 2 years of showing that you've had multiple income sources at the same time, that you can balance multiple jobs at the same time. So the best thing to do is just have a conversation with me and my team, and we'll tell you what income we can and cannot use on that. And then so with self-employed people, I have found that, hey, I gross 200 and $300,000, but I only show taxes on 50 because who wants to pay Uncle Sam? Well, I can only qualify you based off of 50 grand, but they have the $200,000 to $300,000 taste. That's usually when we're going bank statement loans on that. This is usually provides the most questions. Do I have any questions from the attendees? If it's okay, if you come back, send some questions. I can always come back. Down payment basics. Right now, 20%, get that out your mind. This is not your grandfather's loan. There's so many programs out here because we know that home prices have accelerated much more than income has. And life has gotten so darn expensive, it's hard to save for the money. FHA 3.5%. I have down payment assistance programs that can put up to 5% um, towards down payment closing costs. So that covers your down payment. And with Shakeira, she's probably going to negotiate some seller concessions. So there's times with FHAs that we can get $0 out of pocket. USDA, as long as you don't mind not living in the city, move out to it's like Valrico. There's some USDA here in Tampa, um, where you can I'll say, like, if someone's interested, I can send the map, because it's interesting. Like in some neighborhoods, one side of the street is USDA eligible, and then the government's infinite wisdom in the same neighborhood across the street, it is not eligible. It's all based off addresses. Why? I don't know. I don't make the rules. I just try to help work around them to get you a loan. VA, you've served our country. I have a 3 hour presentation on VA loans. Who is that? Sasha. If you have some questions about VA, I would love to talk your ear off. Because a lot of times people think that VA loans are weaker because it's 0% down. They don't have enough skin in the game. And that just grinds my gears, because the skin in the game was a service to our country. And that's what you've earned the right to put 0% down, because you have done things that other civilians have been unwilling or unable to do so. So that VA loan is the best loan in America. 0% down, better rates, no mortgage insurance, a lot of great things. Conventional. You can a lot of times people think it's 5% down, and that's usually true. Except if you're a first-time home buyer, you can get down as little as 3%. And there's actually another loan out there that you don't necessarily have to be a first-time home buyer. That was a reduced one, but Home Ready, Home Possible, Home One, those are three programs on a conventional loan that you can put down as little as 3%. And then I want you guys to write this down: 80% of AMI, average median income. That helps you get down to Home Ready and Home Possible. And then that gives you reduced interest rates, 3% down, and reduced mortgage insurance. You just usually can't make more than 80% of the average median income based off of that address unless it's in an opportunity zone. And that's another thing to look into, that if you're willing to live in an opportunity zone, which I think is the best idea if you have a long-term time horizon, because usually those opportunity zones increase in appreciation more quicker than others, and you can get in with less money down. Whew, thank God the slide changed because I'm tired of talking. Shakeira, take over for me. What are some important things to keep in mind when buying a home?
So the biggest thing is keeping your loan on track. So that means basically once you're on a contract, you got your pre-approval done, we're not going to do a few things. We're not going to open up any new credit. We're not going to make any big purchases, any big deposits, big withdrawals. We're not going to go buy a car. We're not going to do anything. We're not going to go put that down payment down on the furniture just yet. We
Well,
are
unless you don't use Shakira or myself to buy a home and you're like a 1 week away from closing, go celebrate and buy yourself a new car and completely sabotage your loan. I'm not petty or anything.
right, right. But the biggest thing is too, John, is you want to make sure you're working with a very knowledgeable real estate agent because that real estate agent is going to keep you on top tier when it comes down to deadlines, any questions that you may have, any steps, any worries. And also, too, John is perfect. He's always ready to answer your questions. And if
Mhm.
you have a question about anything, if you're thinking about doing something as far as making any type of money moves, just ask.
Yes.
And no question's a crazy question. We love questions because that's what we're here for.
Absolutely. And so I would agree with everything you said. Take a screenshot of this page. These are things that once you're like pre-qualified, just don't change your financial situation. Don't switch jobs. Don't move money around. If you do move money around, it does get intrusive. Like it looks like you just moved money from your checking account to your money market. I need both savings accounts. Usually we want to just like put a plan in place where we're 2, 3 months out. You leave your down payment, closing cost money in that account. Don't touch it. Let's simplify things. Let's keep it as simple as possible,
Mhm.
because usually the more information you add to an underwriter increases questions that can, and we like to make it as easy, like where the underwriter can just use a crayon to approve you on that. Down payment assistance. So, put a little message if you're interested in down payment assistance, because down payment assistance is its own beast. And there are some really good programs, and there are some that are marketing ploys. But down payment assistance is there and it's great for the right person. Most down payment assistance, like with Florida housing and Georgia housing, are second mortgage options where the loan, it's either a bond, where it's like what's great could be like 0% interest with zero payments due, and then it's forgivable 20% a year for 5 years. So after 5 years, it's fully forgiven. But a lot of them say like, hey, if you refinance or you move out of the home or you sell your home, you have to pay back that second mortgage of the down payment assistance. Like Hometown Heroes is one of my favorite programs to use, but it's very restrictive when it comes to refinancing. You just have to know all the ins. The old adage that there's no such thing as a free lunch is very true when it comes to down payment assistance. But there are grants. Like right now, for the next 2 weeks, 3 weeks, I have a grant through the Federal Home Loan Bank of Atlanta, where if you at 80% of average median income, you qualify for up to $15,000, and it truly is free money. It is fully forgiven at the day after closing, and on any loan type. But those grants are few and far between, and they run out of money very, very quickly. The Federal Home Loan Bank, I had a lot of people pre-approved with it, and by the time they found a home, it ran out of money, and that's very frustrating and heartbreaking. But right now, yeah, on Monday, I got an email that said, "Hey, we have enough funds between now and it'll probably last until like the first week of November." So I'm like, "Well, that is perfect timing for this webinar." So that is one really good grant that is available. But for all the attendees, take a little screenshot. Bam! Hometown Heroes, Florida Housing. That's something that we work with a couple loans a month on. There's some like Florida Assist is a good uh, one. The city of Tampa, they if you have to buy within the city, they have all the way up to $50,000 in a second mortgage with 0% interest and no payments, as long as it's your primary residence. So if you move out and you rent it out, you owe that money back. Georgia has a great program called the Georgia Dream. Oh, I see. Is there a question somewhere? Webinar chat. There's a question in the Q&A. How do I get to the Q&A question? There it is. How long should you wait to make another big purchase after buying a home? Good question. The good answer is whenever you want, because once that loan is closed and you sign on the dotted line, you got your keys, they can't take that loan back. So go buy whatever you want. But if you once you go under contract, you better not make any big purchases before you close on that home. As soon as you sign on that dotted line, that home is yours. Do whatever you want. Go live your life. The underwriter's done with you. But before then, the underwriter, he or she makes the rules, unfortunately.
Yeah.
And they're tracking all your money habits and they're making sure that you're not opening up any new lines of credit. They do a credit check 3 days before closing to see if you signed up for that 0% Kohl's card to get $20 off on your purchase right there. Had that almost sabotage a loan a couple years ago, and I'll never forget. And every time someone at Kohl's asked me for a credit card if I want to, I let them know. I said, "You, how many times a day do you ask that? Will you please ask them to say, are you buying a home right now? Then don't apply for this Kohl's card." Sorry, a little tangent there. Federal Home Loan Bank of Atlanta. They have a great, that's a true grant, but they run out of money very, very quick. Do we have a new question and answer, or did I answer that? Answer live. Done. Brittany, let me know if that answered your question and if I didn't do it good. So let's talk. Let's work. This is a workshop. Let's workshop. In the Tampa Bay area. So if you're paying about $2,200 a month, and apparently that, according to some research, that is the average rent for a single individual, $2,250 a month. Well, instead of renting for $2,250, you can buy a home for $300,000. And if you say, you know what, $3,000 a month is rent, that's usually a typical one with family with kids. That's about a $400,000 home here in Tampa Bay. So what can we get? Um, these are two beautiful listings, courtesy of Shakeira's office. Shakeira, tell me a little bit about Bower Bass.
So Barbados is located in one of our master plan communities here at the Epperson Lagoon. And if you haven't heard of that, that's the first man-made beach in the USA. So
What? Did not
yes,
know that.
really fun. It's nice if you're family oriented, you have kids, even if you don't have kids and you just want to be at the man-made beach when it's red tide season, then this is the place for you. It's lots of amenities. They have Wi-Fi included with their HOA. It's very nice. So it's something that that our community here, more like I said, is more outside on the outskirts of Tampa. But this is one of the places that people like to flock to.
Well, nice. So let's talk about that money side of it. So this one is priced a little bit higher, 439,900. So it's considered a 10% down payment, and I can get a loan at 6.5. But Howard Team Home Loans, that's, we could probably get you a little bit lower. But the estimated payment all in, 3747, and that's including your principal and interest. So that 250542, that will never go up. That will never go down for the next 30 years. If you ever overpay your mortgage and apply it towards principal, next month they say thank you, but it's still 250242 next month. And when you ever overpay, it just shortens the life of the loan and you pay less interest over time. Now, your homeowner's insurance, we just pulled this number out. Good estimate, $250 a month. Homeowner's insurance does unfortunately seem to continue to increase every year. But that's a good, like I had Insurance agent do a quick quote, and that's within the realm of possibilities. Now, the property taxes of $681 a month, that's pretty high. And that's because, as Shakeira mentioned, it's the first lagoon, the beach lagoon.
Yes, yes, the
Yes.
first Crystal Lagoon here.
So that lagoon, I've been there. It's fun. But it costs a lot of government resources to build out that and develop that land to get roads and access roads and utilities and run all that. That's called a CDD fee, a community development something fee, and that adds to your tax bill. So when you pay your mortgage company is going to pay that lump sum tax bill that would go towards your ad valorem and non-ad valorem taxes, which include that CDD fee to Wesley Chapel. So that's why that tax bill is a little bit higher. And then the mortgage insurance of $89 a month because you didn't put down the full 20%. But if you ask yourself and said, "Hey, self, would I rather have $44,000 separate from my accounts, or would I rather pay an extra $89 a month?" Now, I hate mortgage insurance because that doesn't go towards building wealth unless I can take that $44,000 and earn better outside of it. There's no right or wrong answer. It's whatever's comfortable for you. Unless, of course, you don't have that extra 10%, but you want that house, then you're going to do it and get that $89 a month. It's not that bad. Mortgage insurance is not that evil. It's not worth renting. But this also, in addition to that CDD fee, also has an HOA fee as well. So that's what increases that housing payment all the way up to 3747. But you ask yourself, is it worth $225 a month in HOA, higher taxes, but I get to go to that lagoon. I get my quality of life. I'm in a neighborhood that my kids can play with kids, and I can ride around on a bicycle and leave in the front yard and not get stolen, and I can go to the lagoon. No
And
right or
it's
wrong
a
answer.
golf cart community too.
It's what?
Golf cart community.
I love that. That. Now, you say, "Hey, sounds good, John. Way too expensive." All right, well, we're going to still stay in Wesley Chapel. Love it. Tell me about Prairie Way.
So this one here is over in one of our communities. It's an older community, but the schools and everything are still, the same because as you can see, you still have the same zip code. You just have a different development that was there a little bit earlier. So this would be more like your 3 2 bedrooms, more like a starter home. If you don't have a big family, you need to use one, maybe a bedroom for an office, or just like I said before, how do you plan on using this space? Is this one day going to be an investment property for you? Or with this, are you downsizing? We have some people who's grew up in a large home and kind of don't like that, all that space. Mom, dad made you clean up every bit of that square footage. So you're like, no, I want my first home to be something petite, something that I can control. And this is probably more, the size of square footage that you may like here.
Nice. And it's a much more manageable $2,400 a month. So that's $1,797, never going up, never going down. $225 for homeowners insurance. But this property tax bill does seem a little low for that purchase price. And that's probably because this seller has lived in that home and homesteaded. When the greatest thing about buying a home in the state of Florida is that homestead exemption, where your property taxes once you buy the home, it's going to get reassessed. So I bought the home on October 22nd, 2025. I inherit that bill for a year. And then in 2026, it's going to get reassessed one time. And you homestead your and say, "Hey, this is my property, that my primary residence, it's my homestead." Your property tax then, after it's reassessed for that initial sale, can never increase more than 3% a year. If it was your investment home, it could go up as much as 10% a year on that. So that 3% a year cap helps stabilize, and it's called the Florida Keep Our Homes Act. Um, but that's something I also think about. Say, hey, let's check, and that's one of the things that we do with our first-time home buyers, and say, hey, listen, we can get this smaller tax bill in the first year, but it's probably going to get reassessed. Let's prepare for higher taxes so you don't get what's called payment shock. And then your mortgage insurance, because it's a lesser loan amount, the mortgage insurance is a little bit less, and this HOA fee is less. So you're all in for $2,400 and $31,000 separating from your account on there. Now, again, if you like Sasha, who's served our country, her $310,000, her can have a loan amount of 310. So that's going to increase her monthly principal and interest payment But VA loans and FHA loans, they have a lesser interest rate, like probably more like 5.75 instead of 6.5 on a conventional. So that's going to help the payment quite a bit. But it will still go up. And that's something that what my team and I love to do is after we get you pre-approved for a purchase and say, hey, we want to stay around this payment, you and Shakeira build a search. And then you narrow down and say, hey, you know what? These are the 3 homes I like. We run scenarios on all the homes and go through this and say, okay, hey, what can I afford? What can change in the future? What is something I'm not thinking about? And we can run that scale. And I call it the seesaw of comfortability. Do I want to put 10% down? That's more money separating my account, but I'm going to have a higher payment or a lower payment. Or do I only want to put 3% down and I'm going to have a higher monthly payment, but I get to have more money in my account? No right or wrong answer. It's whatever works for you.
Mhm.
Now, let's bust some myths. So I need perfect credit. You don't. You can get down all the way to a 580. And went and looked and said, okay, hey, right now, if I went and I had a 580 credit score on an FHA loan, my interest rate is about 7.125 today, based off of it. And I looked at that payment. It's similar to renting, maybe a little bit higher. But now I'm building my house, and as I repair because nothing's going to repair your credit better than 12 on-time monthly payments of a mortgage. Maybe I can build my credit up and I can refinance in the future to get a lower rate and a lower payment. But I got that house at a cheaper price, and my home is going to appreciate on a 4% average basis. I need a huge down payment. I want to buy a home, but I can't. Hopefully, we busted that myth to show you that say, hey, based on different loan programs and down payment assistance programs that you may or may not qualify for, we can run and see what it does. You don't need it. Rates are too high right now. Well, they're at a 13-month low. I had someone at 800 credit score in 2022 put 40% down and got a 7.875 rate. Geez, oh Pete. That was the highest. It's October 2022. Then I had somebody with like a 600 credit score in 2021 during COVID get like a 2.875. It's all relative based off. So like that's the one thing that we can't control is what the mortgage-backed security market is. But right now, and unfortunately, I keep thinking that rates are going to come down. They need to come down. But the Jerome Powell, he controls the Fed. When the Fed funds rate is different than mortgage-backed rates. So but that will affect home equity line of credits. But the thought process is that rates are going to continue to decrease. But the Mortgage Bankers Association economists came out and said, hey, even if the Fed keeps cutting rates, mortgage rates are going to stay similar right around the 6.25, 6.5% range for conventional for at least another year, maybe 2 years, because there's a lot of things in the secondary market. Like I'm digging in the weeds right now. I'm a nerd when it comes to rates, but it's something that the mortgage back, the Fed quantitative easing, quantitative tightening, the Fed's selling off their balance sheets. So long story short, rates are going to stay right around this range. So but home prices are expected to appreciate as rates come down because every half a point in rate that comes down, more than 5 million new home buyers enter the market. So then that's when you're going to have more competition to compete for these home prices. So if you can buy the home now at the rate, and remember that your dollar is never worth more than it is today because of inflation, you can lock in that rate, lock in that home price, and then in the future refinance into a lower payment and amortize quickly. Looks like we got another question to answer. What are some pros and cons of refinance? It's a great question. So the pros is that I'm going to get a better rate. I'm going to have a lower initially, immediately have a lower monthly payment. The downside is that the state of Florida doesn't have income tax, but we do have high transaction fees, which are called doc stamps on your mortgage and intangible taxes and owner's lender title policy. So the title fees and the homeowner, like we are the fifth or sixth most expensive state to refinance. For my Georgia folk that are here, you're lucky. Property taxes and refinance rates are very, very low in Georgia. It's like less than 1% of the loan amount on that. So there's not many cons of refinancing, except that if you start over, let's say you're 5 years into a home and you refinance into a new 30-year, well, you just added 5 more years of payments onto the back end of the loan, but your monthly payment's lower. But you can also overpay your mortgage to do it. You can also get a 25-year term if you needed to. So there's a lot of different things. So like my background's in financial planning. I was a finance major in college. I did retirement planning for 10 years after college before I got into mortgages. I love to have these conversations to talk about, hey, I I had conversations with people that said back in COVID, I'm going to go from a 6% rate to a 2% rate. Great. But I'm going to sell my house in a year because I need to move out. My family's moving. Well, then don't refinance because it usually takes 2 to 3 years to break even by the time you added all the costs into the loan and refinance. So it all depends on what your specific goals and timelines are to calculate that break even if it makes sense to refinance. But the two biggest pros of refinancing, number one, if you refinance what's called a rate and term, you can get a lower payment. And if you have really bad debt, like the majority of the refinances that we're doing right now are people that have owned a home for a few years and they have equity, but then like life is so darn expensive, they now have a lot of credit card debt. They have a lot of consumer debt that's just eating them up. Well, you can access your equity to pay off that bad debt and free up cash flow as a household on that. And so your mortgage payment might go up. On this particular person that I'm working on right now, she had a 7.5% interest rate. We're doing a cash out refinance. She's going to have a 6.5% interest rate. So her payment's going to relatively stay the same, but we're pulling off enough equity to pay off credit card debt that freed up cash flow. So that's another huge pro and another benefit of owning a home because if you're renting and you accumulated debt, what lifeline do you have to pay off that bad debt? You don't have a house to use as collateral to pay off that bad debt and to refinance it into a lower payment to free and give yourself breathing room. You can maybe get a debt consolidation loan of some sort, but those usually have higher rates. So the best way, because if you think about it from just a personal lending standpoint, the more collateral that you have, the better terms you're going to get. Like a personal loan is like, hey, I promise you I'm going to pay you back. And then maybe they can garnish your wages. So your paycheck is a pretty good collateral. But not like that's what Amscot does to you. But you have a higher interest rate. Whereas if you use your house, you're going to have a lower interest rate on it.
Very great explanation there, John.
Sorry, I dig in the weeds sometimes. All right, let's talk timelines, Shakeira. Well, first off, let me handle the first one. Application. Right now, we're at the end at 8 o'clock. I told my wife I'll be home by 8:15. I'm gonna be right there on time. And I want to get you out of here at 8 o'clock. Um, if you want to figure out where you stand right now, you can go on to howardteamhomeloans.com, do an application. All we're going to do is a soft pull on your credit, so it's not going to negatively impact your credit score. I'm going to get your W-2s, your pay stubs, your tax returns, and I'm going to say you qualify for this much. But then based off our conversation, your comfort level, you probably, your payment is here. We reverse engineer. You're going to be more comfortable at this purchase price. And then we can then send you the beautiful pre-approval letter over to Shakeira after we go through all the different options to start shopping.
There. Right. And everybody's timeline is different, whether it's 6 months or 2 years out. I had a first-time home buyer that I literally worked with for 2.5 years. And we're very patient. We're here to stay. I'm going to be a real estate agent. John's going to be a mortgage lender. Like, we're here to stay. So whatever you need from us, no matter if it's like, well, wait a minute, I think I might pump the brakes, or you're ready to go right now, we're here to support you.
Yeah, so I'm asking my team right now, who was the person that we closed either this month or last month that we worked with for 4 years. We got them initially pre-approved 4 years ago. And every few months, we went through the pre-approval process, updated the pre-approval, and they had a very specific area that they were looking at in a very tight budget. And we were continuing to look. And then they had like a job change where they went from salary to commission, but it was a better life move. So we had to get at least another year of like showing that they're earning more income to help increase the pre-approval. And it was, I mean, it was a great feeling that for 4 years, and all we do, like I say, we're professionally persistent. We'll follow up with you once a month, checking in, want to see if there's any properties that we want to work with. And if we get annoying, say, hey, John, shut up. I'm tired of seeing your emails, tired of hearing your voice. Maybe you can do it every other month. We will move at your speed there. And so we want to make sure that you know that we don't forget about you, but we'll never be annoying and we'll respect your time and your privacy. But everyone moves at different paces. We just don't want you to think that we forgot about you because we want to be the one to help you get those keys.
Yes,
There.
indeed.
And our last slide. Wow, 801. I started at 703, so I feel like I'm right on time.
Oh,
Again, Howard Team Home Loans. There's a cool QR code. We'll walk you through the steps. We'll turn your rent payment into equity and home ownership. And Shakeira, take a look at that beautiful QR code. I'm jealous of your palm tree QR code.
nice. Yes. So yeah, so basically if you're ready to get started, like you said, make sure that you know, get those QR codes down. Um, and then if you have any other questions and concerns, just make
I
sure
do
you.
see one question in here, and both Shakira and I, we have a great person that we work with to help build credit. So if you know your credit is not credit worthy to buy a home, you're not wasting our time by filling out an application and having a conversation and a
Mhm,
buyer consultation because we're going to set you up with either like if it's something easy where we can say, hey, pay off this, pay off that, do this, do that. My team's pretty equipped. Now, if you have some serious issues, we have one credit company that we have found that is actually worth paying that will help get negative remarks removed, help negotiate different things. Whereas, like, if you ever heard of Lexington Law, I don't know how they're still a business. All they do is just dispute everything, and then they get it off, and then your credit score is artificially higher. And then all of a sudden, they do the disputes, and they find out that hey, you actually do owe that money, and they put that money back on and that collection back on your credit. And next thing you know, now you have Lexington Law debt and your credit back debt, and they're just terrible. I hate that company almost as much as I hate Rocket Mortgage. Oh, dang, this thing's recorded. I shouldn't name names.
mhm,
Anyway,
mhm.
send me a cease and desist, Rocket. I don't care. Um, but yeah, we have reputable credit companies that can help you um, get to where you need to be.
Yeah.
Any other questions? Because I'm going to leave it open for 2 to 3 more minutes and then I'm going to hit the end all. But now is your time to put questions in the chat. You can do the question and answer. Let me see if I can pull in um, someone from my team, see if I forgot anything. Ingrid, Kyle, did I forget anything that I wanted to mention? Said no, better not call on me. All right. Well, we had like 8, 9, 10 attendees. Anybody have anything? Any good, bad? Hey, John, this is and Shakir, this is informative. This is the biggest waste of time. Um, any questions that you want? And if you have specific questions to your situation, please reach out to our emails. We're gonna all the attendees. We're gonna send out this copy of this recording, and we will follow up at your pace.
Yes, indeed. Thank you for the comment. Latoya said it was very informative.
I'm gonna
Um,
sleep silently tonight now. Thank you,
so
Latoya.
is Sasha. Sashay. Thank you. All
All
right.
right. Well, it was really great here, Shakir. It's always great spending time with you. And for all the participants that are here, if you hang up and you're like, dang it, I should have asked that question, shoot us this email here, scan these QR codes. We're just a phone call away. And we want to be the ones that will fire your landlord and build equity and get the keys to your first home.
Yes, yes, yes. So thank you all so much for joining us tonight. I hope you're leaving here with a clear understanding about the home buyer process. Thank you so much to John with the Howard Team Home Loans.
Yeah, you
And
got it right. We can stay friends.
Got it right.
Yeah.
And I'm just so happy. Like I said, he's been a blessing to my family as well as all of my customers. And you guys, anything that you need, please just reach out to us because we're here to help.
Well, I don't do these webinars for just anybody. Shakeira has passed the sniff test. There are a lot of realtors out there that are not very good. And Shakeira is one of the ones that are excellent negotiators, like a bulldog, where like you're so happy that she's in your corner because she's so awesome and loyal and informative to her buyers and will protect them. And then when it comes time to negotiating, you don't want to be on the other side. So um, it's always great partnering with you.
Well, thank you so much, John. Same to you.
Well, I hope everyone has a great night.